So today is a truly global webinar. I am in the UK as Capital Trust Properties is a sponsor of the Global Top 50 Awards, highlighting the achievements of top female entrepreneurs in the UK. As you know, Capital Trust Properties is one vision is to give back to society. So one pillar of our CSR is women empowerment. So today, Dr. Bram Nicholas joins us from Vietnam,
That's right.
and he's an economist with a PhD in economics, specializing in industrialization and global economy. We have our crew from Sri Lanka, and we are here today to analyze the 2026 budget that was concluded and to see its impact on the economic growth needed for debt sustainability and how it impacts on the private sector. So welcome, Bram again, Dr. Bram Nicholas. How's
Thank you.
Vietnam? How's your stint in Vietnam?
I always have mixed feelings coming here, especially in the last 3 years, because I love Vietnam,
Okay.
but it makes me sad when I arrive here and see the contrast with Sri Lanka, where Vietnam is clearly taking off and a lot is happening, but
Okay.
Sri Lanka has stagnated over the last 3 years. So the contrast is very apparent. But I think there's a positive to be taken out of that. There's a lot to learn from Vietnam for Sri Lanka.
Okay, I will quickly analyze I will just give the highlights of the 2026 budget. So the 2026 budget marks a shift from crisis to recovery and reform. It focuses on fiscal stability, investment confidence, and private sector revival. Then the economic growth is projected to be 7% with the inflation in single digits and deficit targeted at 5.9% of GDP. For the first time in several years, Sri Lanka is budgeting a primary surplus of 2.5%, signaling genuine fiscal discipline. On taxes, the government plans to simplify the system. The national tariff policy will reduce customs duty to just four bands of 0, 10, 20, and 30%, while phasing out para tariffs such as ports and aviation levy cess. And we also think that the digital tax system, e-invoicing, and the RAMIS 3 will modernize compliance, reduce leakages for businesses, and this means more sort of predictability, transparency, and competitiveness. On the SME sector and enhancements, we see that the SME threshold for investment incentives has been dropped from $3 million to 250,000, widening access and supporting local entrepreneurship. Then on the reform side, on the Port City Act, there's Strategic Development Projects Act. The SOE restructuring will make investments more rule-based and credible. On the green and social front, there's new welfare targeting systems, a carbon levy framework, more funds for education skills, which I am for, because I think that's one sector that has to be enhanced, and steps towards inclusive and sustainable economy. Overall, the budget signals stability, simplicity, and structural change. And I think if implemented effectively, it would be rebuild confidence and attract investment and position the private sector to drive Sri Lanka's next phase of growth. Now, having looked at the core fiscal and structural measures in the budget, let's now explore the underlying assumptions, what they mean for debt. Again, debt sustainability in 2030 and investor confidence and long-term growth. So my first question to you, Bram, is What structural factors could prevent Sri Lanka from achieving the planned debt reduction by 2030, and how resilient is this strategy to external shocks like higher global rates, slower growth? Yeah.
Yeah, uh, I I think there's going to be some problems ahead. You know, what I'm going to start with is, I think, something that has been assumed from the outset is that when you do fiscal consolidation, so you improve your budget by having a surplus or reducing your deficit, that this automatically translates into a reduction of government debt as a percentage of GDP, of course, because we know that the government and the IMF have placed a lot of importance on reducing this particular ratio. But the IMF itself has said in 2021, they brought out a study showing that actually over the last 40 years, when they analyzed economies across the globe, fiscal consolidation was actually not shown to have a relationship with the debt reduction in relation to the size of the economy. And I think that is simply because what you're focusing on is the nominator of that ratio and not the denominator. And if we look at countries like Vietnam, China, and even India, they've had continuous fiscal deficits, but their growth rates have been phenomenal. And so what's happening there is that they've been able to manage their debt to GDP ratios not by doing fiscal consolidation, but to actually grow their economies using their fiscal weaponry, as it were. And so I think there's a bit of a misunderstanding there as to how fiscal spending or the fiscal side of things translates into managing your debt to GDP ratio. So that's something I've been noticing in
That's
the
very
language
interesting.
used in the budget speech.
Okay, that's very interesting. Then, what do you think? The next question to you is how might shifting the direct to indirect taxes balance affect private sector activity and income distribution? And what administrative or institution capacities are needed to ensure this reform holds? So that's a shift between, direct to indirect taxes.
Uh, a shift to indirect, from indirect to direct.
Yes, yes.
I I actually thought it was the other way around. But I'm actually not sure, Minoli. I generally don't like this does not fall within my framework of analysis.
Okay.
I just know that when the government or the previous government, I should say, shifted it in the other direction, so we got the increase in VAT, and generally we saw that lower income groups were disproportionately taxed higher. I know that that actually had I would say, a negative impact on the economy, not just because I feel for the poorer people who are affected more by that, but also I think it's actually bad for economic growth in the sense that you're actually you're actually damaging the middle class of the country, which is supposed to be your main driver of consumption. And so if they're now reversing that, I think that's actually a good sign.
Okay.
So
That's great.
that's what I could say about it.
Okay, then the other major reform is to what extent can digital reforms such as this RAMIS 3 and e-invoicing improve revenue collection, and what lessons are Sri Lanka to draw from countries that implemented similar systems under the fiscal pressure? That's
another technicality that is not within my expertise. But
all right. So I
again,
think this is
there's
to broad base the tax collection. So I think we
yeah,
are.
exactly. And I think that's been a major
That's also a
concern for
major,
people.
yeah. So I think that's also a major reform that is good for the country. Um,
Absolutely, because
yeah,
as people have said, because I have read a bit about it, is even if you sort of increase tax rates and your intentions are there to increase revenue through those means, it doesn't mean that in practice you can actually do this if you don't have the tools to, you know, implement it. So I think this is one step in the good direction where tax collection is going to be made easier through this digitalization, but also, as you said, widen the or broaden the tax net. Something that is very necessary because I don't know if this is also going to address the sort of the unofficial economy. But if it does, that's going to bring
that's a
in
good,
quite a bit of, yeah,
exactly.
that's going to bring in quite a bit of
So
tax
that will be
revenue.
a positive change, right? And the,
Yes.
yeah. Then then the next question to you is, given current fiscal constraints, how can public-private partnerships be structured to attract credible private investors while avoiding liabilities for the government? Would you be able to answer that?
If you can give me a bit more info on that, like, is there a particular sector that you're
No,
thinking about with?
so mostly the SOE restructuring, so now right now it's the most of the government sector organizations are run by the government sector, right? So if there is restructuring that needs to be done, do you think that that's a good move? Because that is, um, right now our private, the government sector is very bureaucratic and we
Mm.
overspend, yeah.
Yes, I'm always in favor of, let's say, privatization if it is in areas that can be competitive. So if we're talking, for instance, about Sri Lankan airline, then I see no reason why that shouldn't be privatized. When we're talking about electricity, so the energy sector, I think there should be a bit of caution as to what areas
Exactly.
are privatized because distribution and generation are two very different things. And some of those areas can be privatized because they can be competitive, where others are more difficult and also require more long-term planning. So this is where even countries like the US now have learned from China, which is the weirdest thing ever,
Exactly.
that for energy generation, you do need some long-term planning, which companies are generally not so good at, but governments can do. And so you see that China has really sorted out its energy needs for the next 30 years by planning with nuclear reactors, more renewable energy, and so on and so forth. Whereas the US is struggling to meet the demands, and that's why a lot of their companies still to this day move to China. And so for Sri Lanka, I would say the same, in terms of distribution, perhaps you can privatize because that can be competitive. But in terms of generation, I would advise a bit more caution because it's more difficult to make competitive.
So what you're
And
saying is the industry should be selective, so the utilities should be kept by the government, which I also agree, and certain sectors should be privatized, right? Or there
yeah,
should be, I mean, some sort of PPP, participation.
exactly. And that would be advisable in that industry. But like I said, other ones like Sri Lankan Airline, I don't see a reason why that couldn't be completely private.
Okay. Then my next question to you is what policy mix and external conditions would realistically allow Sri Lanka to sustain growth above 7%, which is needed for, I think, debt sustainability, and which indicators should analyze and track and gauge progress?
Yeah, so this is where my controversial opinion comes in. Because essentially what I'm reading from the budget, actually I've been reading both positives and a few things where I'm thinking it's similar language to what I've seen before, and I'm a bit skeptical. So let me start with that, where the government has, again, in the 2026 budget speech, talked a lot about macro stability, fiscal consolidation, debt sustainability. For me, that in itself, even though there are things to be said there about the use of it, that in itself does not make me optimistic about Sri Lanka's growth trajectory, because we know that actually requires something completely different. And there we arrive at a few things that I was positive about, where the government has highlighted two things in particular. One is to focus more on building a production economy. And so there they've talked about manufacturing goods, both for export, but also to reduce reliance on imports. So I think that is a positive. And also, when we're talking of exports, they mentioned in particular export diversification. And that's also been one thing that I've been advocating for, is generally in countries that have grown rapidly, they've done so on the basis of exports, but they've done so on the basis of diversifying their exports, because we know that relying on a few, let's say, primary
Sectors.
commodities like tea or coconut or rubber never really allows countries to grow their exports that much. But if you move into areas like electronics manufacturing, machinery,
Correct. Yeah.
yeah,
With much more
higher value
margins,
added, but
higher value added services.
that's true. But there's
Yeah.
also much more potential for diversification. You know, think about the millions of different electronics that exist out there. And so that diversification really allows for very rapid export growth. So that was something I was very positive about, and I hope the government is serious about it. Because another thing they did mention in there is that what it's going to require is targeted subsidies and incentives for both domestic and FDI companies to move down that line, because you can't just, ask a coconut farmer to start producing electronics without any
Exactly.
backup. That's it's going
Without
to take a lot of.
incentives, yeah, without incentives,
Exactly,
that sector won't grow. So I think
exactly.
incentives are important. Interestingly, UK is also going to deliver its autumn budget on the 29th of November. And in anticipation of, higher budget tax hikes, we've seen a decline in the growth, right? And we've also seen in the media a lot of articles on, a lot of the rich UK um, HNIs are moving to other tax havens. So, in alignment of that, Sri Lanka is also going through this fiscal change of, charging more taxes. Do you think that is the right direction? Because countries like, um, for example, Singapore, Hong Kong, Dubai, which are very high growth stories, are less reliant on direct taxes, but more reliant on attracting FDIs through incentives.
I think what the UK is now struggling with is the fact that they realize they have become, and especially London, but let's say a lot around, a lot more than London as well, they've become almost a financial economy. So a lot of their growth depends on developments in the financial sector, and basically non-production activities. But I think like the US has woken up to this, it's not a sustainable path. You need a production economy as well. You need to manufacture things in your own country. In the process of, let's say, shifting to that production economy, I think it's not easy, and there's going to be hurt. There's no doubt that their new policies of raising taxes is going to damage growth because they're so dependent on the financial sector and, let's say, the billionaire classes in the UK, and also the foreign billionaires that have brought money into the financial sector. So I think in the short run, it's going to be quite damaging, but I think it's something that needs to happen because the path that they're on now, they know it and I know it. It's not sustainable. And so something needs to be done, but it's not an easy thing to do. There's going to be some damage in the short run, but I think in the long run, it's going to be good for the economy. They're going to actually increase growth. And what they're doing now, I think, is the correct thing to do. But it's undeniable that it's going to cause some damage in the short run, and you are going to see a lot of billionaires leave. But yeah, as I said, it might not be a bad thing in the long
run. Okay. So it's what I see is it's an opportunity for us if we do the right, follow the consistent policies to attract these HNIs and also the diaspora. We have about 700,000 diaspora in the UK alone. So who would even invest in properties? Because they are like, they have a bond with Sri Lanka. So I see a real opportunity in that as well. So
Absolutely, yes.
yeah. So I just in conclusion just wanted to ask, what do you think is the overall the budget 2026 highlight? What you think are the most impactful changes in the budget?
Well, like I said, I'm really positive about their focus on the production economy and the export diversification. My concern is rather with whether they have planned the right policy framework to achieve it. And it's not, let's say, entirely the fault of the plan per se. It's also the constraints that they're working with. And that is, and I sound like a broken record when saying this, but I keep saying it because I don't hear it too much anywhere else, is the extremely high interest burden that the government carries and continues to carry. 50% of their total spending goes to interest payments on the debt that they have issued. And that is something they have to address. They have to address it for two main reasons. One is, if they really want fiscal consolidation, this is something that they'll need to address because spending is going to remain high if this interest burden also continues to be this high. And if they want to reduce if they want to actually have a primary surplus and an overall surplus, so the difference there is the interest payments, then what they need to do is address the fact that, one, they are dealing with a really high real interest rate on domestic government debt. So if you look at Sri Lanka's, let's say, real interest rate on 5-year government debt, it's still at around 8%. And that is much higher than comparable rates in India, China, and Vietnam, where it's between 2 and 4%. And so those countries have much less of an issue with their interest burden. The other is Sri Lanka's continued exposure to very expensive international sovereign bonds. And of course, there was a pause on those payments after the debt restructuring, or after the debt default, I should say. But interest payments have now resumed, and they're going to increase as we move towards 2029. And that is going to actually renew or increase the pressure on the interest burden. And now there are actually calls for Sri Lanka to go for more ISBs, more international sovereign bonds, which I think is a mistake, because this is in part what led to the high interest burden in the first place. And the other part of this is, so the problem with the high interest burden is, on the one hand, the fiscal consolidation plans that they have, but the other part of it is the fact that it's constraining government spending. It's constraining government spending on things like education and social welfare programs and things like that, but it's also constraining spending on items that should be boosting growth. So we know that the high growth countries around the world have managed to do so because they use their budgets to boost infrastructure, to promote exports, and to provide incentives. And so all of these things are going to be really difficult with such a high interest burden. So I have concerns about whether the government can actually achieve its growth targets through boosting the production economy and diversifying exports when they have such a handicap that has continued. You know, it's come from a previous government and the government before that this interest burden remained, but I don't know if they're doing enough things to deal with it, because they should actually be very cautious of taking on more ISBs. And they actually need to do something about the domestic debt situation, where the Central Bank Act is currently preventing them from using captive sources, government entities, to reduce the real interest rate. And so traditionally that has been done through the central bank and the EPF and the ETF and state banks, but they've been constrained in bringing that interest rate down through new legislation. So I think that needs to be looked at if the government is serious about reducing the interest burden and following through with all the spending plans that it has. Because we know from last year that they had a real problem with implementing the capital expenditure that they had set out to do. And so looking ahead, I think this item has not been given enough attention in terms of following through with the plans that they have. So I hope the government does, behind closed doors, have a plan for this high interest burden, because that'll be crucial in achieving their growth targets and reducing the overall debt to GDP ratio.
Okay. Thank you, Dr. Bram. Nicholas, now we come to the end of today's session, and we thank you for joining from Vietnam. And we look forward for another session in the future. Thank you.
Thanks.